Hi, Phil Iverson here in Chicago. This video is about Subchapter S corporations. Sub-S corporations have been around for a very long time. They are essentially corporations that offer limited liability, and it has the tax effect of flowing through directly to the shareholder or shareholders, if there's more than one, so to speak, the owner or owners of the corporation. This is in contrast to a regular C Corp. A C Corp, just like the ones on the Fortune 500, they operate as their own separate entity, and there's a bottom line, an income or a loss. For income, they pay corporate tax. Last year it was just about 21%. This was a big adjustment from some of the previous years, but in addition to that, there are state taxes. Here in Illinois, it's around about 9.5%. A little bit of a calculation there, but right there, that's about 30%. This year, the tax rates will almost for sure be going up. At the time of this video, I'm not sure what they are. But with a Subchapter S corporation, the bottom line number, I'm talking about the net income, net loss, that flows through directly to the owners on their personal tax returns, to the shareholders. So if I was the owner of a Subchapter S corporation, my company and sole owner, sole shareholder, the company made $100,000, they would not pay federal corporate tax. Actually, in Illinois, you pay a little bit of state tax to the Illinois Department of Revenue. But anyway, there would be no corporate tax at the federal level. It would all flow through to me. And the thing about that, when you have a C corporation, they pay tax once at the corporate level. Now, if monies want to get distributed out to the shareholders then have to pay tax on their dividends. So it's a double taxation. That is the primary difference with a C corporation and a Sub-S corporation. Now, to become a Subchapter S corporation, if you're already formed a corporation, a C Corp, you file a piece of paper. It's a tax paper. I believe it's form. I have the document here. Let's see. I printed this out from the IRS website, and I know most of this by heart. I've been preparing tax returns a long time, but I think if you can download and print out something about this, it really gives you a chance to peruse the instructions at your leisure. And whenever I have a tax question myself that I'm looking up, I often do this. I'll pull it up. If it's a little bit lengthy, I'll print it out. Easy on the eyes. But I believe it's the form to file is 2253. Let me see. It is. Sure enough, it's it's not. It's 2553. But that is the election to become a Subchapter S corporation. Now, there's something you should be aware of with the Subchapter S corporations, and the folks that have been around for a good while, and they already know this with their companies. But you are, as owners, if you're an operator, if you're involved in the management, day-to-day operation of the company, you are required to pay yourself a salary. And the salary must be reasonable, sort of in line with what a manager in that industry at your level, sort of what an average, approximate average of the average person would get for that job position. And I'll tell you the reason why this, and I smile when I say this, I'll tell you the reason why this was put in place. There were some enterprising sub-S owners, and they said, you know what, the Social Security taxes are a fortune, and they're very pricey. You know, you've got Social Security, about 12%, and you've got unemployment tax. You've got quite a bit of taxes there. They said, you know what, I'm going to pay myself $10,000 on my salary, or not even pay a salary at all, and I'm going to let all that flow through to me as ordinary income, and thus get around the payroll taxes. Now, I know some of you are thinking, well, gee, people wouldn't actually do that, but some folks did. Now, no, not everybody, I won't say that, but for that reason, the IRS, they put that rule in there. You've got to pay yourself a reasonable salary. As far as the due date for a Subchapter S Corporation, it is the same as a C Corp. It's generally speaking March 15th. So that's about a month before the due date of personal returns, which is generally April 15th. There are quite a number of rules regarding corporations, including sub-S corporations. And when the tax return gets prepared, there's got to be at least 30 questions relating to the status and operation of that corporation. One of them is, if you were required to pay folks on 1099s, if you actually paid them on 1099s. Because again, the IRS is tracking income. They do not want, especially here in the US, they don't want income being paid to people, and then those people do not file their tax returns and pay tax on that income. So this is another thing to be aware of. It is a question on the tax return itself. There's a few other questions. I won't get through. It's a rather lengthy discussion. Just wanted to give you a little bit of an overview for a sub-S. Again, Phil Iverson here in Chicago. Hope your business does well.